Good morning, it's Jonathan Barrett with the morning debrief. It's Friday, and it's Friday the 10th of June. The current time is 8 o'clock. Look, the Dow closed up, which was good. Good to see a little bit of a bit of a correction, to tell you the truth, of those 6 days of decline. Actually quite happy to see the market up a little bit. Obviously a little bit of profit taking towards the close of the week. Data was a little bit mixed. Obviously jobless claims not that positive as well, and that down by 1,000, which was greater than expectations. Still causing concern there, consternation of how the economy in the US is actually travelling. And we're not getting a clear direction, and that's obviously what we're seeing, I guess, in some of the commodity prices, where we're not seeing a direction either way. It's a lot of tug of war, pull and pull in terms of supply and demand. We're certainly seeing that in the oil market. But before we get into that, let's have a little bit of a look and see what's happening around the world. Just coming up there, a little bit of data there. Obviously, the Dow we know had a solid night, and that was up. Here we go. The strong night there for the Dow. That was up 75 points, 12,124. The S&P was up 9, and the Nasdaq was up 9.49 as well. So that's quite encouraging. Probably expect those gains to extend into tonight as well. The top 50 was up 26. The FTSE was up 47. The CAC up 40. And the DAX was up 99, so quite a strong move there. The local market also fared relatively well, up 21 points, closed at 4,575 on SICOM. So that seems to be quite good. Actually bodes quite well, I think, for today's trading, particularly for the SPY. So we'll probably anticipate a little bit of a lift. Maybe it's short covering, but to me that's a positive thing, something we need. Okay, let's have a look at the dollar index first of all. And as you can see, a little bit of a lift there for the dollar. That's a policy which we feel will eventually come through to the currencies, through to the commodity sector. But good to see that US dollar index up, which was quite encouraging. And obviously a little bit of a low there. Has it broken the trend? Well, look, time will tell. But if you are going long the US dollar, then really you've got to look. It stops at 73.70 and below that at 73. Now the Aussie battler was under quite a little pressure yesterday, but managed a bit of a gain. And I think if anything there, it's that yield which is certainly holding it up. That differential between Aussie and the US are very strong indeed. There's the low, 105.62, and I think if anything there, let's see what happens. But it's the yield that's holding it, and you might get a bit of support from the equity markets today. Over in Europe, obviously Trichet came out and suggested no interest rate increases. He did actually signal, though, that we will get an interest rate increase in July. That caused obviously a little bit of strength towards the dollar, weakness in the euro, which, as you can see by that chart, probably signifies that we do have a little bit of a top in place for that currency. Disappointing news on the dollar yen, but have a look at that move. Has it reached the lower end of its range again? Do we look to get back in? We've had some successful trades in the dollar yen over time. And we've always said that we'd have a look at it and see exactly how it unfolds. Just looking at it now, you can see that dollar, that daily chart, it's right on its lows. Let's just crunch it up a little bit. It sort of feels as if it's right for a bit of a move to the top side. Low risk trading opportunity there. You can buy it now with a stop below that level there, below that 79.60. So low risk trading opportunity there for currency. Having a look at gold, as you can see, it's a rounded top trying to form here. These moves have a ability to just keep on going because it is holding on to these highs. Look at the break below 15.25, but as we suggested, with expectations on inflation certainly there, particularly in Europe, you can only but see that gold certainly has a big tone, dips to be well supported. Silver 37.58. Actually like the look of this chart and probably expect it to probably want to trade a little bit higher. As I've mentioned quite some time, we feel silver is the cheaper alternative at the moment over gold. So when I look at gold and silver, I actually prefer buying silver. Okay, so that to me represents probably a little bit of a good opportunity. Obviously, you know where your stops are on that. Okay, let's have a look at some of the other markets. Crude oil 101.85. We had a bit of an inventory draw. Look at the way it's working into that wedge. I like those sorts of moves. It's going to be quite interesting as to which way it's going to bust. But it's a wedge which is all the same. Resistance, as we know, is 102.40, and support there now at 98.20. It's working its way. Tug of war is certainly in the market. Inventories last night were surprisingly low, a draw. We had a draw in API during the week as well, quite a significant draw. That's probably suggesting that we are a little bit of tightness, but one would have to expect that leading into the drive time. Having a look at copper 410, as you can see, still within a bit of a range. Look, if anything there, I think the market is undecided. The market really wants to see how economic performance works its way through the economies. It's not really happening at the moment because we've got such a mixed picture. Now, this is something that a couple of scary things. There's corn. Corn finally broke out to the top side. Just look at that chart, and I'm trying to get a little bit more because it's a trade which we've been talking about forever, or not, but for quite a long time, because we actually feel that those tight supplies. There we are, and we have mentioned quite a few times that we expected corn to reach through the top side of the market. Corn at the moment 784. If you're not long, obviously you know where your stops have to go, all the way down at 725. Wheat 744, obviously dragged up a little bit by what happened in the corn market. It has suffered some losses, but it was good to see that we did get a lift. And oops, let's put that back there. And a little bit of a lift there, but right on the trend line. Hopefully it'll hold. Soybeans 1391, similar story to wheat. But when I look at soybean, I still like the fact that we're travelling above this trend line. So I don't like the fact that we've got a little divergence there. But at the moment, I think corn is leading the way. Soya should be well supported by what we see there. Okay, that's pretty much it in terms of, I guess, just an overview of what we think some of the market is. I guess one quick thing is obviously natural gas. And as you can see, we've had that blip in natural gas is not a good market. We don't know what happened yesterday, but as you can see, there's a little bit of skullduggery, I think, in the market, particularly for that volatility. So just be careful if you are trading the natural gas market. Righty ho, economic calendar tonight. And what have we got at any note coming out? There we are, consumer prices in Germany, obviously probably expecting a little bit of a tickle high to the top side. A lot out of there, a lot of PPI out of the UK, manufacturing, industrial production, and import prices in the States. So that's pretty much about it today. I hope everyone has a good weekend. As we said, it was one of those weeks which was a lot of, we want clear definition in where the economies are going. We're not really getting that. More slowdown, I guess, in the US is the worry on the cards at the moment. But anyway, let's see. We've got some trigger points we've mentioned. Remember to follow the tweets because they'll give some good opportunities there, to opportunities that we're actually looking at. So that's about it from me. Have a great weekend, a long weekend here in Australia, and we'll talk to you later.